Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live on YouTube at TradeEZ or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hi everyone, I'm Stephen Kalayjian and welcome to the Bull, the Bear, and the Ugly. Wow, the Bulls came out and what a stampede. It was unbelievable. I told you this week, within 1 to 3 days, we're going to make a low and we're going to shoot right back up. We had two great reports, the PPI on Thursday, the CPI on Wednesday. Markets ignored it. We got deeply oversold. Yesterday, S&P futures got down to the 55.09 in a quarter. And he never looked back. The guy who sold 55.09s in a quarter, he jumped, right? Because I'll tell you what happened. Today, we pushed up above 5,600, right? 5,600. And then the consumer confidence number came out. Boom, right down to 55.64. And wait till I show you this pattern. I couldn't believe it was a buying opportunity of the day. You had nothing but buy divergences on the continuous contracts on the 30 and 60-minute time frame and the 15 when you got that pushed down. And then we pushed all the way back up. We made new highs on the day right before the market closed. Phenomenal. I think we got up to the 56.48, 56.49. Phenomenal patterns today. Phenomenal patterns. Now, which I can't wait to show you. But first of all, look at this right here on the daily. When we got the push down here, you can see right here, all right, that was yesterday, 55.09 and a quarter. That guy, they'll never find him. Forget it. S&P's rallied here. Now, when we got down there, we were roughly about 280 points away from my 10-bar weighted moving average. For the S&P futures, the norm is 50. For the spiders, it's 5. We were 25, 27 on the spiders. Standard deviation on that is 5 and 50 on the S&P futures. So what you can see here, right, we still have a little way to go. My thinking is to get this a little bit more oversold to overbought into the negative MACD, and we're way below the 200-day moving average now. So we want to be able to get some type of a bounce and then another push down here. All right, but a really great pattern. But this is something that you need to see. Okay, first of all, if you bring up the spiders here, you can see we're 14 away. That means if probably thinking 14 from here would be about 57.50 on the S&P, right? 57.50, 57.80, 5800, something like that. But watch this. Look what happened today. As of the close today, the weekly closed below this 573.67. This is the first time that the weekly will reverse to sell, and I'm going to show you, since November 17th of 2023. That's right. The first time we got a major sell signal. So when you get a sell signal on the weekly, like I did just now, where come Monday morning, ding, 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 you're going to see that flip orange over blue. You don't get a sell signal, and then the next week, you get a buy signal. You wait a couple weeks, right? It's going to get a push up, get pushed down. Here's what I'm thinking. I think we get one more push up here, all right? We get one more push up, 5,800, get the oversold condition on the daily, the weekly to kick in. And then I think we get a push down. You want to get these MACDs to come below the pivot. And then I think we're going right back up to 6,500, okay? So we had a nice pullback here. In 4 weeks, the S&Ps were trading 61.66. I was looking to short them 61.80. I was 14 points away. Dropped sharply, right, in 4 weeks. And I'm thinking next 2 or 3 weeks, big, pretty good push up here. You'll have some hiccups along the way, but it's grinding to work off that oversold condition. But then I think we go right back down. I think we go to maybe 5,400, 5,430, 5,450, because the monthly chart on the spiders needs to hold above the 5370 on the S&Ps right here. That's the number right there. I don't think it's going to break that 10-bar moving average. All right. Let me go back to the weekly. Let me show you what I'm talking about. You can see here, this is the first time since we got 11/17/23. We've been in this uptrend. Look at this. Beautiful pattern pullbacks here on the weekly, and this here, and now it'll be reversed for the first time since November 17th of 2023. Unbelievable. Now, if I show you the Qs really quick, the QQQs, they're already reversed. So one's not going to go negative, okay? One's not going to go negative, and the other one's going to stay positive. So it just took the spiders a week later to reverse the sell. Not the end of the world, okay, because the monthlies are still intact. However, I think the market's going to have a lot of headwinds you'll get your significant oversold conditions. Maybe you'll get that 166 distance from the price to the 10-bar moving average erased, and maybe 50 over that. So potentially we can get up to like the 5780, 5820 on the S&P, but that 6166 is going to be intact for a while. I think the highs there could be intact for like the next probably 4 to 6 months per se, unless something great happens. Now, there is a chance because of Powell on the Federal Reserve Board. He's leaving in the end of May. President Donald Trump probably is going to put somebody in who's very dovish, and President Trump wants lower interest rates across the board. So with that, I have to say that I think that we're going to have a low rocky road here for the next 4 to 6, maybe 7 weeks, up and then down, and then I think sometime in the second to early part and mid to second quarter, beginning of the third quarter, we'll just start seeing us move upward again. All right, so let me show you some really great patterns today. This is the pattern of the day here, okay? This is the pattern of the day. When the 30, there were phenomenal, 2 great patterns on the 15-minute time frames. You can see, first of all, when we opened ding, 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 at 9:45, we got the buy reversal on the Qs. And the buy reversal on the Qs, okay, happened at 9:45. So you went from a buy reversal on the Qs on the 15 to a sell disconnect on the 30 and 60-minute time frame. One's positive, two's negative. And then right here at 10 o'clock, we had the big buy reversal on the 11 o'clock. We had the big buy reversal on the Qs on the 30-minute time frame, which now put the condition into a buy disconnect. Remember, the 15 and the 30 are in buy now. The 60 is still on negative mode. So you went from a sell disconnect to a buy disconnect was one of my 5 conditions. And then look what you can buy here, right? You bought the first pullback on the 5-minute time frame. S&P futures got down to 56.11. They traded all the way up to 35. The Qs traded 477.24, and they rallied more than $2. And then the last pattern right here came in a lot deeper oversold, and you can see the Qs dropped to 477.35 and then ripped again more than about $2.50. Spiders, the same thing. Now you can see here on the spiders, when we got the oversold condition on the 15, we also got the oversold condition on the 30. Beautiful pattern, oversold into the positive MACD. Nice buying pressure on both the 15 and on the 30. And the spiders, beautiful 560.23. And you can see, wow, they're almost north of 32 handles on the 32 points on the S&P. These patterns, when the 30-minute time frame reverses to buy, it's one of my most powerful strategies. Today, when 10 Tesla, what I'm going to show you, reverse to buy on the 30-minute time frame. On the 30-minute time frame, Tesla reversed to buy. It correlated with the 60 and the 15-minute time frame. You buy the first pullback. Tesla ran, I think, $5 or $7, and I'll show you that next. But on Monday, you can see here, okay, but the spiders now reversed to buy on the 60-minute time frame, right here near the close. Here, at 3:30 today. So this now has reversed to buy. So now you have what's called a trend. The 60s just reversed to buy on indicator 4. The 30s bullish now. The 15s bullish. It's just a matter of time before the Qs. And it looks like the Qs are going to reverse to buy here on the opening on Monday. Ding, ding, ding at 9:30. You can see this right here. They're going to reverse to buy. All right. Again, this gap will probably get filled. Again, after we push up, we're going to get this push down. So I don't think the downside is over yet, but I think we go up first before we go back down. All right. Let me show you Tesla. Phenomenal pattern, Tesla. Okay. Phenomenal pattern on Tesla. So here's a 30-minute time frame reversing to buy. It correlates right here with the 30 right here, 11:30. It correlates. Let me put the 15 up here. That would help. So you can see Tesla reversed to buy here on the 30-minute, right here. It reversed to buy, all right? And it reversed to buy on the 30. It correlated with the 15 and the 60-minute time frame. What do you look to do? Look at you buy the first pullback on the 15 into the positive MACD, rising ADX, big buying pressure, boom. Look what Tesla did. Beautiful. 240, 650 or under, boom, it ran $3. Here's the second pullback that I caught at the end of the day. I called a great long under 248 in Tesla. And look what it did. Tesla just at the end of the day ran almost more than $2. Now I expect this to gap up on Monday because of this condition. So what you saw here is a phenomenal strategy. When the 30-minute time frame reverses to buy and it correlates with the 60 and it correlates with the 15, it's one of my most amazing patterns. It's unbelievable when that pattern, and it happens up and or down. Okay, like we saw in the last couple of days when the markets were selling off, when the 30-minute time frames reversed to selling, they correlated with the 60 and the 15. You short the first bounce. Yesterday, S&P was trading 55, 58, 58, 55, 59, and within probably about 45 minutes to maybe an hour, hour and a half, they dropped 40 points on the S&P. So I'm showing you a methodology, a strategy. It's one of my favorite strategies. So please, if you're in my community, please observe the time frames, the 15 to 30 and the hourly. It's important to learn my methodologies using multiple time frames, using indicator 4, looking at the conditions, right? And then understanding the strategies. Very important. I always tell people, if you put 1, 2, 3, 4 on a piece of paper and I did this yesterday. Next to number 1, put a 4. Next to number 2, put a 1. Next to number 3, put a 3. And next to number 4, put a 2. That's how my eyes are trained. The first thing I look at is indicator 4, then the indicator 1, and then indicator 3, and then indicator 2. People say to me, how come you don't do that? Put it that way. No. I have it this way for a reason. I see the flow better. But I know I have it set like that, but mentally I know exactly where to go, right? And again, I told you I use indicators 1, 3, and 4 85% of the time, and 15% of the time I use indicators 1, 2, 3, 4. Okay, all right. So MSTR, another monster long today. An MSTR here. You can see this beautiful, beautiful pattern. When you see a pattern like this. This is an absolute Picasso. I mean, I can't even tell you how important this is. Okay? All right? When you see this pattern here, oversold, ADX, the MACD, slightly negative, the rising ADX, the big selling, the big buying pressure, oversold, the yellow dots into the cayenne. MACD positive, rising ADX, monster buying pressure, right, on the 30. On the 60, MACD positive, rising ADX, big buying pressure. Look at the yellow dots. This is a Picasso. This pattern, the S&P futures, if you count 1, 2, 3, I knew it would come back. 1, 2, 3, 4, 5, 6, 7, 8 bars. Within 8 bars, you can see the run up here, all right, of $8 on MSTR. This is an absolute Picasso. When you see those ADXs rising on the 15, the 30, the 60, and you see the big buying pressure, the MACDs are beautiful, beautiful, right, on all 3 time frames. And you get indicator 3 to pull in. This is like, I'm going to Vegas next week. This is like walking by table and go, all in, right? So, and these patterns repeat themselves. These patterns repeat themselves every single day. And it's imperative to follow. That's why I leave my charts up and running. Yes, I'm going to be programming a lot of stuff in the near future, okay? But again, these patterns repeat themselves every single day. All my strategies are predicated on divergence patterns. This is a phenomenal buy divergence in an uptrend. That's it. That's it. It's a buy divergence in an uptrend. All 3 time frames on indicator 4 are buy mode. You get the oversold condition on the 15. You see all these conditions on the indicators, right? Boom, oversold, positive MACDs, rising ADXs, big buying pressure, yellow dots into the blue. I wouldn't want to be short MSTR 288. Okay, whatever it was, 288.30. So guess what? Up and away. Again, so monster day today. I'll show you the Russell, the IWMs. Again, just going to keep showing you how these patterns repeat themselves here. All right. Great pattern here on the IWMs here. All right. Now you can see here IWM reversed to buy on the 30-minute time frame, and it correlated at 10 o'clock with the 15, and I'll bring up the 15. But then look what happened here at 11:30. At 11:30, the 60 reversed to buy, which now made all 3 time frames go in buy mode. Again, here's a pullback, boom, and here's a second pullback, boom. Look at the yellow dots into the blue. This is an absolute Picasso. Absolutely Picasso. Okay? You can't ask for a better pattern than that. I mean, again, just to show you how perfect this pattern really, really, really was. Okay? Now, it's also important to understand, okay, when you see something, even like a stock like INOQ, okay? INOQ, you can see the rising ADX. You can see the 15s reversed to sell. Okay, no problem, right? The 15s reversed to sell, but the 30-minute time frame was also in a buy mode, so you can actually buy the pullback here on this INOQ, rising ADX, positive MACD, buying pressure right here under 23.80, right? It didn't really do much, and maybe it ran maybe 50, 60, 70 cents, and then later on with the buy program, at the end of the day, they rallied them. But again, this is a buy divergence and a disconnect. 2 of the 3 time frames are in buy mode. Let me show you Palantir, PLTR here. At the end of the day, you're making new highs here, 87.14, but the MACDs do non-confirm. And what is this strategy? Well, this is a sell divergence in an uptrend, because all 3 time frames, the 15, the 30, and the hourly time frames, were deeply oversold. Okay, I'm sorry, the 15, the 30, and the 60-minute time frames are all in buy mode. Okay, look at Microsoft at the end of the day. Monster long in Microsoft. Monster long. Look at this pattern on Microsoft on the 15-minute time frame. And this is after the 60-minute time frame reversed to buy in Microsoft. Okay, Microsoft reversed to buy on the 60. Here's the 30. Here's the 15, right? The 30 was already positive, so the 15 reversed to buy, correlating with the 30. Now look at the 60-minute time frame right here. You can see the rising ADX on the 30. Look at this. Here's the 60. reversing to buy at 12.30. What do you look to do? You buy the first pullback, 80 under 87. Look at this, what this thing did. It ran $1.60 at the end. It ran $1.60, 1, 2, 3, 4, 5, 6, 7, 8. Actually, it ran almost $3. But at the end of the day, you got a buy program. And let me just show you this. There's no way you would have been able to short this. This was like very, very fast, right? If you look here, you can see the high in Microsoft right here. All right, now I was short around here, and I covered it below 88.30. And then look here, 390.23. When Microsoft pushed up here, the MACDs cannot confirm the high. Now, granted, it happened fast. Look at that. It did almost more than 300,000 shares on the 5-minute time frame, or this particular time frame. So when you pushed up, you made new highs, but the MACDs cannot confirm. Okay, the same thing with the S&Ps at the end of the day. You can see the S&P futures were making new highs here at the end of the day. Okay, it was getting late, 48, and if I make my chart just a little smaller here, you can see that the MACDs did not confirm. If you draw your horizontal line here, the MACDs did not confirm the high. Better yet, I'll even bring up the spiders. You can see the sell divergence here on the spiders at the end of the day. The new high right here on the day could not confirm. If I can draw this low right, can you see that? So when the spiders hit that 563.83, they dropped 23. So the S&P futures right here, you can see the high here, 48. Trading, what did they just trade down to? 22. So they just dropped 26 here. Again, looking at this, you can see that you're making new highs here, and the MACD did not confirm the high. Unbelievable pattern. And actually, one of the people one of my traders in my live stream actually said, "Steve, should we short them?" I'm like, "It's just getting late. There's no reason." Yeah, I mean, they trade an extra 15 minutes at the end of the day. But, we had a really good day. I saw the sell divergences on the Qs, on the spiders. On top of that, even got one better, okay? If you look here, you had a double sell divergence on the spiders, one on the 5 and then one on the 15. You can see you're making new highs at the end of the day here, okay? You're making new highs at the end of the day. The MACDs are negative. You had the double non-confirmation on the spiders and the Qs. Right? So what you have here, you have a new high. The MACDs did not confirm, okay, on the 5-minute, it should have been going up with it. It didn't. And the MACDs on the 15 did not confirm. Same thing with Palantir, same thing with Microsoft. So guess what's going to happen? On Monday, if we gap up, a lot of these MACDs are negative here. Avago, okay, Amazon, Palantir, a lot of them, and I'll get into that in the next segment. So again, that pattern right there was a great, great, great pattern. Okay, when I come back, all right, I will tell you what I expect for Monday. Okay, so Monday at 8:30, we have a big red number. We have a retail sales number comes out, and that's going to affect the market one way or the other. But I just think that because we have this deep oversold condition still, I still think the market's going to trend higher next week. We were up about 1.79%. We're still down for the year. NASDAQ was up 2%. Russell was up 2%. Dow was up 1.4%. So, the spiders were up. S&P were up 1.8%. So roughly between 1.8 and 2. So we were only down about 5 and change. I do think we're going to probably push up, erase that loss for the year, but I think we're going to go back down again. And again, that weekly chart, that 573.50 that I showed you, that weekly reversing to sell, that person who bought 6166s, well, he has to get on his knees and pray, because that's going to be a long time. It could be several months before we go back up there again. I do think this is a healthy correction. I was talking to someone today that the market's rallied from 4,800 all the way up, right? Because of these 7 names: NVIDIA, Amazon, Tesla, Microsoft, right? And Meta and Apple. So all the big 7 cap, and Google, right? All reversed up, and they pushed them. It was like just throwing a dart. So now you're starting to see, obviously, a shift here where now it's just pure corporate earnings. A lot of these big funds are out of these names. And, I saw a story last night someone sent me that a very big hedge fund lost nearly $1 billion. Well, you know, a billion, but 900 million to a billion. Now they run about 30 plus or 50 plus. So what's a billion? I hate to say it like that, but you know, that's a lot of money to a fund. And they shut down a lot of their pods, you know, their groups and everything. You know, a lot of people haven't seen markets like this, right? A lot of people, I'm doing this 41 plus years. That's why I love to be able to get in and out of trades, go home. I'm going to the pier at the end of the night here after my podcast. I'm going to go meet some friends, enjoy my life, right? I don't have to worry about big positions overnight. There's so much alpha to be made during the day. And you know what? It's all good. Now, I understand a lot of these guys have to manage money, but the way they manage them, they just sit there like a deer in the headlight. You know, they're all fundamental. They don't look at, and from what I understand, they don't look at pure technicals. That's what I do, pure technical trading. And it's important that that's what I teach everybody in my community. I spent nearly 10 years of my life building my chart overlay, which is on TradingView and on TradeStation and also on Ninja. I teach people in my community each and every day. I stream every day from 9 to 4. So it's important that you all should be able to follow and be able to be consistent and do well. You have a mentor, you have technology, and now it just takes you the time to learn and to listen, right? To ask questions, to be proactive. With that being said, Monday, I probably will, since the 60-minute time frames are going to reverse to buy, unless something terrible happens, which I don't see it. The 60s are going to reverse to buy, so I'll probably be looking for a push up to an way overbought condition. I probably look to take some shorts since the dailies are still negative and the weekly is negative. And then I'll be looking to take some shorts on significant overbought conditions, and then look for a nice pullback, probably on the 15, a deep oversold on the 15 and or the 30-minute time frames. All right. When I come back, I want to tell you a conversation I had with someone today that really, so far I used him. This will be the second time. I'm not going to mention any names, but I had so many more things to talk about. But every single day I come across someone that just says, you know what, I got to tell this story. So when I get back, I want to tell you my conversation with this individual. Again, I'm not using any names, but this is really important. So please, I'll be right back. Okay, so I talk to so many people around the world. I like to relate to people. You know, at times it's overwhelming, but I give people the opportunity. I always return a call or a text or whatever, mostly a call. I'm not do well with texting. So I talked to someone today, and I read in the Discord that he was struggling on something he did on his own. And I said, okay, I just took a minute to pause and to talk to him. I said, what's going on? And he said, I'm really, really upset with myself. You know, I knew the market was going up. You've been calling for the market to go up, and I did something on my own, and I lost a little money. And I said, okay, not the end of the world. And he said, you know, I traded with emotion. No. So in trading, there's no emotion, right? If you're going to let emotions run wild, you will never be a great trader. I'm telling you right now. You just might as well just pack it up and hang it up, right? Because let me tell you something. There's no trading with emotion here. Now, I'll get pissed off. I'll wreck the whole office, okay? Like today, for example, when the number came out at 10 o'clock, I was short up the wazoo in various different names, okay? In trade alerts and trades and whatever. And boom, they dropped about 30 or 40 points. And I had to ask the community because my system froze. So I went cuckoo, right? And because of the fast market, the data came in finally, and I couldn't even cover on the lows because they traded 55, 64. They traded down to what? 74, 72, 70 after that. I just bought, right? And it was such a great pattern to go long. But I didn't know where they were trading. I had people on my Discord tell me where it was trading. I didn't jump up and down. I went cuckoo, but it didn't ruffle me to the point where I couldn't go back into the game, right? I was already short. Okay, it went in my favor, and boom, everything just dropped. Okay, I never get filled with emotion in trading, even if I lose money. I don't. I don't. I don't. I don't know. Like, it's just the way to be, right? You can't trade with emotion. It's so important. Now, I'll get pissed. I'll punch the desk. I'll throw something. A couple of days ago, I think it was yesterday, I was trying to short Palantir. I missed it by 7 cents. Avago, I missed my short by 3 cents. And they both dropped. I'm like, boom. I got mad, right? But it's okay. Next trade. But I don't get mad or let my emotions run wild if I lose it on a trade. I don't do anything that my system does not tell me to do. You don't. I built this so I can see the patterns, the strategies, and to be able to trade effectively and consistently, right? So if today's lesson is, please don't trade with emotion. If you make a mistake or anything like that, next, that should be your word. Next, you'll learn from it, right? Okay. With that being said, thank you for joining me today. I'm Stephen Kalayjian. I'll see you here on Monday on the Bull, the Bear, and the Ugly. All right. And I want you to please subscribe to my channel here. I do have a new YouTube. It's sktrading.com on YouTube. Please follow me on X at Steve Kalayjian, and come join my community each and every day from 9 to 4. I stream all day long. I'm here as a mentor. I guide you. I educate you. I teach you my software, and hopefully this will help your trading each and every day. My cell phone number is 914-500-7484. Please don't write me a long message. Just text me, call, or introduce yourself. I'd love to hear from you. And with that being said, enjoy the weekend. God bless you, and God bless the United States of America. Be well, everybody. I'll see you here on Monday on the Bull, the Bear, and the Ugly.
Thanks for tuning into the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe on YouTube at Trade Easy or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.